Back in 1923, Novo Nordisk started as a small Danish company focused almost entirely on early diabetes care. Fast forward a century, and that same company is now the heavy-hitting champion of the global weight loss boom. Looking at this projection chart, we can see exactly what they are fighting for. Analysts estimate the obesity drug market will cross the $100 billion mark in annual revenue by 2030. To secure their piece of that pie, Novo Nordisk is moving aggressively. They just released their second quarter 2026 financials, and despite incredibly stiff competition, they actually raised their full-year guidance. If we unpack their ledger, we can see exactly how they are funding the war chest required to defend their turf in this explosive sector. We can start by looking at this financial line graph, charting their net sales for the first half of 2026, which spiked to a massive 175.3 billion Danish kroner. That top-line revenue represents an 18% increase when measured at constant exchange rates. Subtracting their operational costs from that gross revenue leaves them with a net profit surging to 69.5 billion kroner for the half. Drilling down into the second quarter specifically, their adjusted operating profit hit 33.4 billion kroner, easily breaking past analyst expectations. The quarter wasn't completely flawless, though. The company did have to absorb a 6.3 billion kroner non-cash impairment charge. A significant chunk of that multi-billion kroner write-down came from a single pipeline asset called monlunabant, which is an experimental oral obesity drug. But even with those research and development setbacks, these figures prove the company is successfully converting massive global demand into immense cash flow. That cash flow is crucial when we look at their balance sheet, which currently carries roughly 140 billion kroner in total debt. They balance that debt load with very high liquidity, holding about 44.5 billion kroner in cash on hand, and they are deploying that cash rapidly. In 2026 alone, Novo Nordisk is spending 55 billion kroner in capital expenditures. What that money buys is physical scale, a massive, rapid expansion of their global supply chain and pharmaceutical manufacturing lines to meet the overwhelming demand. This is a textbook example of aggressive, healthy leverage. They are taking on debt to build out an infrastructure moat that will be incredibly difficult for competitors to cross. Beyond their manufacturing capacity, they are also expanding how patients actually take the medication, primarily through the new Wegovy pill. Looking at this digital counter of U.S. adoption rates, the pill has already rapidly rolled past 5 million total prescriptions since its launch, and the current velocity is high. As you can see by this final weekly bar, they are moving over 265,000 total prescriptions every week for the pill alone. They are also executing a broad global rollout, launching the pill in the UAE, the UK, and targeting the wider European Union in the coming quarters. Alongside the pill, they've introduced another major pipeline catalyst, Wegovy HD, a higher dose 7.2 milligrams single-dose pen. This rollout strategy means Novo's financial health is no longer tied to a single injectable product. They have built a diversified global portfolio of obesity treatments. They need every bit of that portfolio because they are currently locked in a brutal turf war with U.S. rival Eli Lilly, who actually holds the lead in the American injectable market. This massive $100 billion competition is now spilling out of the pharmacy and moving directly into the legal system. Novo Nordisk recently filed a federal lawsuit against Eli Lilly, accusing them of false advertising regarding the comparative efficacy of their GLP-1 medicines. They are also fighting defensive legal battles in Europe, fending off patent revocation lawsuits from competitors like Sandoz. By aggressively pouring capital into their supply chains, expanding their product line from injectables to pills, and posting double-digit profit growth, Novo Nordisk's second quarter ledger proves they have the financial firepower to dominate the most lucrative healthcare sector of the decade.